Everybody, welcome back to the channel. My name is Paul Nguma, founder of PATTERNOLOGY LAB. In today's video, we're going to be talking about a growth stock that looks like it's ready to recover and get back up to the highs. And I'm also going to be answering some of you guys' questions. For those of y'all who dropped your stocks of interest in the comment section of the pre-market analysis video from yesterday. Before we begin, again, do not forget to destroy the like button for the YouTube algorithm. As always, it helps the channel grow and it allows more people to get this knowledge as well. So let's get started. Let me change the scene really quick. Okay. Um, right now, the market is down. All right. I did leave all of my drawings here. We were in the chop fest before, and then we got out of the chop fest to the downside. Okay, we got out of there. There was a double bottom here, but as soon as that floor broke, it was over. And it looks like the probability of us getting over here towards 37 and 20 is highly likely. The market is not looking too good. If you look at this on the daily chart, it's not looking too great. The selling volume is increasing. And I really wouldn't be surprised for us to see one more, maybe two more days. Hopefully, they're very, very violent sell offs. Hopefully, right? Just a massive sell off to like 3,600 where investors can buy the dip, right? Because long term, we are bullish. Again, these dips happen, and that's all right. So, hopefully, we can see just a massive, drastic pullback. And I will follow up on that in the next video to elaborate more, all right? Now, the stock that is on the thumbnail that is ready to recover, that stock is SWI. All right. And SWI, for those of you who have been watching, who have been subscribing and watching the videos, I talked about this one before when we were right over here at on the 8th of January. All right. I told y'all to watch this. I think it was the 11th, one of these 2 days. I told y'all to watch this thing that I am bullish on this long term. It did have this consolidation period, and now it looks like buyers are stepping in again. Like I said before, they had some issues with some hackers getting into their system, allegedly, right? Which caused the price of cybersecurity stocks like CrowdStrike and Sale to go up. Again, we're going to look at those stocks. Again, this is what happened after that hack. And if you look at Sale, again, this is another stock in that same sector that jumped up and then just kept running up and up. All right. So back to SWI. I think the dust has settled. Again, buyers are stepping in heavy. If you look at the volume right here compared to like everything else, I mean, this is good. This is a great sign. I look at that a lot. And we are also at these previous lows, right? At these previous lows. So this is very attractive for long-term investors to start dollar cost averaging in from the lows of $14, $15, and $16. So this one may take a few days to get up to the price target of 19 bucks, like 19 bucks. And also I want to tell you, be very, very careful because earnings is in the way. All right, earnings is in exactly like 2 weeks. I do not condone holding anything through earnings. All right, it may go up here like as an anticipatory run to earnings. If it gets up to $19 before earnings, great. All right, and then again, participate at your own risk. I would not be holding the stock at all. Like I would not be holding the stock through earnings. Like no, it's just not what I do. I hold before earnings and then I hold after earnings after all of the damage has happened. Okay, but not through it, not through it. So definitely keep that one on your watch list for sure. Right now, now let's talk about you guys' stocks of interest. For those of y'all who dropped those in the comment section, the very first one that we're gonna cover is AMD. All right. And AMD, that one has been featured on our channel before. We made some money over here, right? And then I told y'all that it could make a move up to $100. It didn't quite make it. Every time we tried to go back up there, it failed. All right. It got to $97, it failed. And then they tried to go back up there again and got to 99.23 and then it failed. All right. So a huge disappointment on this one right here. It got very exhausted. And I do see the dark cloud cover on the chart on here, followed by the downtrend. And honestly, I also see that it's not the cleanest, but I cannot ignore this triple top at the top right here. So left shoulder, head, right shoulder. All right, and it's very bearish. That neckline broke, and it's not looking too good. It's really not looking too good for the longs. And personally, I would love to see this thing. Let's look at it on the 5 minute chart. Let's see what happened. So yeah, the damage started happening right over here, right? It double top, right? It tried to retest the 100 and they couldn't, and then it just failed and failed and failed. And honestly, I think since I'm kind of bearish on the market and I do want to see just one or two more red days, I think we can go all the way down to like 80, maybe even lower, like 80, 82, 83. That will be great, right, for a short term bounce for the stock. And then I do expect, I don't have high expectations of the stock through earnings. Hopefully, the stock can tank. Hopefully, the stock can tank all the way down to like 76, maybe even lower towards 73 through earnings, right? Because they can have phenomenal earnings report, and yet their reaction can be just very terrible. So if they can just do like this little dead cat bounce after getting at 80 and bouncing, and then getting annihilated after earnings all the way down to the lows, then it will be excellent for a dip buy for the move back up towards 90 and towards 100 in a few months. All right. But that's my very honest opinion of that one. But short term, I'm not bullish on it. I think we have some room to drop some more. All right. Now, the next stock that we're going to be talking about, that stock is Disney. And Disney, I did cover this one before. I did tell you everything about the stock in regards to that giant gap here that's worrisome for the longs. And I also told you all about, I don't think I told you all about this evening star here. I don't think I did. But there's an evening star in the chart. And also there is a bearish engulfing candle right here. And short sellers have been taking over and they're not letting this one go. If the market tanks, I think that this thing can drop all the way down to 160 and then just consolidate here sideways for a while before going back up again. I know all investors would like to see this thing drop. Like again, it's a reputable company. It's Disney. It's Disney World. All right. A lot of y'all love Disney World. I'm sure a lot of y'all went there in Orlando and in California. It's a very nice place and it's a good business. And they also have their streaming company. Again, these are all the fundamentals that a lot of people like, a lot of investors like. But talking about this chart perspective, we want to see this thing tank just a little bit more and then consolidate sideways. All right, probably all the way through earnings, and then earnings is gonna take it again. I don't know where it's gonna go after, like through earnings, but we will see. We'll follow up on the stock after the damage has been done. All right, now let's talk about another stock. Somebody asked about EA, and EA is another stock that was featured on here. There was money to be made all the way up to like $143. And then after that, it just went sideways. Hopefully, a lot of y'all were not too greedy, okay, and just took your money off the table because this is boring trading action right here. This is not what I participate in. I don't do this. I don't stay in here. I make money here and then I leave. I don't chill over here to find out what happens next. Okay. And right now earnings is in the way. I think earnings is on the second as well. Just like SWI is also on the second. All right. And again, what happens through earnings, I don't know, when I do not condone anybody holding through it. I don't think we're gonna get very far, and it doesn't move that much through earnings. The last one, it moved from 26 all the way down to 119, and then it held. Dip buyers bought it. So if it tanks, it will be great for a dip buy because this is a very reputable company as well. And also watch out for intraday patterns that will make it easier. There was one on the chart right here, the daily chart, but as of right now, it's kind of just it's just not clear, and earnings is also in the way. That's my very honest opinion on that one. The next one that we will be talking about today, that stock is Home. All right, and Home did really really well, and hopefully y'all did not get too greedy and took some money off the table. The stock actually gave everybody two chances to get out. The very first chance was right here at around $24, right? Let me just get rid of this one. Around $24. And then on Friday's dip, it gave another chance to get out at exactly 23.43. All right. So where's this gonna go? It may pull back just a little bit more. Like I think it may pull back. I think we might drop all the way down to $21 before we go sideways and try to go back up towards like 27 and a half, maybe even 30. But as of right now, the stock did its job. The stock did exactly what we wanted. Okay. So we're gonna look at others. This is where you shift your mindset into something that could be providing a bigger opportunity, right? Because it may pull back. All right. If it pulls back all the way down here, then great, we can get back in. All right. But as of right now, it's just I'm just seeing some signs of people are gonna take their money off the table, especially everybody who have been holding through here. All right, if I'm thinking that way, and I'm sure a lot of investors and traders are also thinking that way as well. All right, now one more stock to close this video. We're gonna talk about GM. Somebody asked me to talk about GM, and GM. I'm not sure if I covered this one. I don't know if I covered this one at all. But what I do see here is that this stock may pull back. I think it's gonna drop all the way down to like 47. And plus, this entire run up was due to the fact that it did retest this zone of this line of support, right? And then after that, it formed a piercing candle. I'm gonna remove that one just so that y'all can see this. There's a piercing candle on the chart right here. All right, a piercing candle, just like there was one over here, and then that entire line of support held, and then after that, it just kept ripping with increasing volume. So investors who got in here are happy. I think their money is. I think they're gonna take money off the table. I really think so, especially given the fact that the market may fall next week. Alright, y'all. Don't forget to destroy the like button for the YouTube algorithm. As always, if you are new to the channel, definitely click on subscribe and click on the notification bell along with all notifications. That way you don't miss out on these post-market analysis videos, which are released every single day in the afternoon, and the pre-market analysis videos, which are released from Monday to Friday at exactly 8:15 a.m. Central Time, 15 minutes before the market opens. If you're not following us on social media, you can find me at Paul Nguma in the Patternology Lab on Instagram and on Twitter. Also, if you are new to the market, if you're new to trading and would like to get started, I left some step-by-step directions in the description of the video below. Step 1 through step 4. It only takes about 15 minutes or less to get signed up with all the tools you need to start trading immediately. You can also get 3 free stocks after signing up with Weibo. Use my very first link in the description below. And 1 free stock after signing up with Robinhood using my second link in the description below as well. Once again, ladies and gentlemen, my name is Paul Nguma with Patternology Lab, where we trade patterns and patterns only. And I will see all of you in the next video. All right, take care.